Wall Street's smart money is convinced that Indian markets are in the beginning of the next big upcycle. Global brokerage house Morgan Stanley is bullish on India and believes the correction phase is done. The next leg, they argue, is a macro story. The view is simple. India is heading into a tailwind that puts the 100,000 milestone achievable for the Sensex. Several tailwinds are lining up at the same time. Morgan Stanley says that India suddenly looks like a clean macro table again. Domestic growth is strong, policy is shifting through interest rate cuts, GST rate cuts and income tax rate cuts. The brokerage adds that the government is front-loading capital expenditure. Consumption is getting an uplift from indirect tax easing. It also adds that the global China +1 reset is pushing incremental manufacturing and supply chain flows towards India. A likely India-U.S. trade deal may give India better preferential access very soon into the world's biggest consumer market too. Other analysts are of the view that valuations have become less insane. Experts say that this gives India room for a price-to-earnings expansion again. Another structural front in India's favor is the easing of crude oil prices. Combine that with lower inflation volatility over the coming multi-year horizon and you get the exact cocktail that foreign portfolio capital likes. High growth, low volatility and more predictable policy. But risks do exist. Geopolitics, global demand for Indian goods and the fact that U.S. equities are still magnets for passive flows. But the bottom line from the street is clear. India is back in the high conviction bucket.